Hey everyone, Andy Moss here, tradingadventures.com, bringing the weekly charts a day early as the markets are closed for the Good Friday holiday today. And we're going to take a run through the same charts we look at every week. We see what themes and storylines are building upon each other in the market, how the price action has progressed. We've been watching a fairly steady, orderly decline for several weeks now, and this week we got the first little hint of a bounce that we've seen in quite some time. So jumping right in here, starting with the S&P 500 as the SPY ETF, we can see a little dip here below last week's lows and a rise pretty steadily through the end of the week into a close, which is right at this declining 4-week moving average, roughly equivalent to a 20-day moving average. And that's where prices stop. This is an inside bar. This is a slight bounce attempt, no resolution yet. Volume is in line with the average, the rolling average, and RSI not quite back to the midpoint yet. Looking at the Qs, NASDAQ 100 ETF, same situation here. Movement on either side of this anchored volume-weighted average price from last April's dip, as many wonder, do we see a similar V-bottom scenario? The charts will tell us in time, looking at the headlines and everything going on, it's easy to make a case against that, but we're not going to worry about the narrative. We will focus on the price action, and the Qs also stopping, closing the week right at a declining 4-week moving average, still below a 40-week moving average, which is roughly equivalent to a 200-day, and the declining 10-week moving average, roughly equivalent to a 50-day there. Volume also in line for the week, even though we're shortened by 1 day, and RSI just below 50 there as well. Dow, the DIA, similar action, above the 4-week average, but below the 40-week average. So once again, it's nice to see a green candle after so many weeks of red, but this is a bounce attempt that does not change the overall market structure at this point. Small caps trying to maintain a bit of leadership and relative strength, closing here at just below this anchor from the November low, and above, nicely above a declining 4-week moving average. And just as kind of trivial here, we closed right about the close of this candle 5 weeks ago, and pretty close to the area of these recent highs back in October of last year. RSI is above the midline as it chops around here. Volume doing the same as the others, just about in line with the 20-period average there. Bitcoin is still a floundering mess. No improvement here. We're still stuck in this bearish consolidation pattern below all the moving averages. This slight rise there a few weeks ago found resistance at the anchor from this slight rise, which turned out to be a failed breakout attempt. And so nothing positive developing on Bitcoin yet. As we shift to the dollar, the US dollar is holding up very well. Still probing and struggling at this anchored volume-weighted average price from the peak back in January of last year, but it's 4 weeks of consolidation above this line and in this shaded area, not precise levels, but just gives an idea of where price is trying to hang around. So this is continuing to build, working off some of the recent move, and could very well be setting up for the next leg higher in time. But it's like many other things, it's certainly a two-way market at this point, and that could develop in either direction. Volatility tamed a little bit this week, back down into this range. Nothing terribly notable there. The rest of the world, the all-cap world index, US, looks very similar to the US indices. A bit of a bounce. It actually looks closer, more similar to the small caps, as we've got 3 weeks of support here at the rising 40-week moving average, but a bit of a choppy mess here below this anchor from the November lows and below declining 10-week moving average. China's still hanging around down low. We had this DeMark buy set up last week that gave way to a little bit of a rise here, but certainly no major bullish development there or indication of lasting reversal, as it's still below this declining 4-week moving average. Moving on to the bond market. The aggregate bond index, similar action, a little bit of a bounce, still stuck at this declining 4-week moving average. Treasury bonds, same deal, with a little different compression here, but declining 4-week moving average, you can see that is a recurring theme on many of these charts. And high yield bonds, a bit of a better bounce, back up above the 4-week, printing a DeMark 9 buy setup here. But some of these, on a lot of these charts, this 9 signal showed up on Monday, early in the week. And so it's very possible that the bounce has kind of already happened. That's not to suggest any attempt at prediction of what happens next week, but just pointing out the facts that the signal showed up early on Monday and that it did get some follow through here in the week. Looking at the commodities as a group represented by GSG, the iShares Commodity Indexed ETF, really strong here, really overbought RSI, pushing the upper Bollinger Bands steeply higher. Volume continues to be above average, and we don't have to guess where that strength is coming from. If we look at the oil futures as a whole or independently, just another massive move higher, with much of this coming yesterday in Thursday's market session. This range from last week's low to this week's high, 35%, a little better than 35% in a 2-week range there on the oil futures. So the action still continues to be very heavy. Volume has come back down in line with the average, which has been rising, but just very volatile, very overall strong action in the oil futures there as positioners and traders deal with the international headlines. Gold moderating a bit as the chart catches up and looks a little more like stocks. It's very strong. We got a bounce off of this rising 40-week moving average last week and some follow through this week, but it's holding up pretty well right in the middle of the Bollinger Bands, which are still sloping upward. Everything looks overall healthy in the gold market, but again, no material change out of this kind of middling range here at this point on gold. Silver, similar action, but maybe not quite as strong. The pullback was in the range a little wider, perhaps, and kind of stuck here at this anchor from this little low back in October of last year. So just to recap a little bit there before we move into some of the other charts, this is just another peak tracking for several weeks. Steady, orderly decline as the sell-off continues, and now we've got the first bounce attempt in several weeks. So expect this bounce, but we don't have to trust it yet. There's no indication that this would be an absolute bottom. We'll have to see how it develops. But these are the same series, the same charts that we track every week as we see how the storyline develops and what changes, if anything. And so far, it's still just on the shorter time frame, it's a counter trend bounce. And we have to be mindful of that and know that there's still plenty of work to be done above if prices to continue higher. So we'll identify and respect that sequence, but we don't need to anticipate what happens next. And now we'll go into the some relative strength measures here. This is the growth versus value. as we see more consolidation in a downtrend. This is a little bit of a bounce here. And once again, I'm going to point out the instance that we've been seeing, not predicting, but watching for, is this pattern of kind of a double test of an oversold RSI. It's happened several times, and recently it's almost each time the RSI gets down near oversold levels, we get one more push lower before we see a more sustainable bounce. This one didn't last very long. This one gave way to a much bigger uptrend, and so we've got, and the same thing was somewhat true on the upside as well. So still want to be mindful that maybe we get one more push down towards value before we see an overall shift back to growth, and it could have been this one right here. This is very close. Let's just go ahead and highlight that. And so maybe it's already happened, but that's to be determined. We don't know that yet, but that's just, again, that's a thing, an instance that I've been pointing out several times over the recent weeks, and we'll continue to see how that develops. Moving on to staples versus discretionaries. Again, sideways consolidation. This is a bearish consolidation pattern in a downtrend, and the likelihood goes towards the staples, meaning that the higher probability event is that we see continuation lower. RSI is gaining here just a bit as the prices, or the relationship between the prices, stabilizes, but no disputing the fact that it's below the moving averages, and the higher probability outcome is a continuation lower. High beta versus high volatility. A little bit of a wider range there on this candle, but no resolution. The 4-week average is flat. It's stuck right between the declining 10-week average and the rising 40-week average, and so it's going to get pinched here a little bit, and we'll have to see how that one develops. And then looking at, well, we'll go right into the SOX. From last November lows, dipped and looked very susceptible early in the week. Center line of the Bollinger Bands here, we've got a declining but trying to flatten 4-week average here, and we've got a declining 10-week average here. So there's no real resolution yet. It is notable that we bounced strongly from those lows earlier in the week, but we really need to see movement back over this area to have a shot at getting back towards the highs, or maybe even pushing this upper band higher. XBI was a standout. This has really notable bounce here, taking it all the way up to a new weekly closing high here, and piercing this line. This is just a little doodle that I drew in here to show the potential for a kind of a rounding top pattern, and right now it's making a good attempt at negating that. So new high, weekly close, strong green candle bouncing from this area where it has traveled several times before, as the Bollinger Bands are continuing to tighten. So some confirmation and continuation higher here next week would look very favorable for the biotech sector. Software, not out of the woods yet, and still trying to find some support in this 76 to 76.50 area, a level that it has probed and bounced from many times in the past. We saw it happen again here, and now we've got a small inside candle in the lower half of last week's large sell-off. So no resolution there yet, and this, I would classify this as bearish action, or a bearish inside candle in this context of this intermediate trend, term downtrend. So still susceptible there to further downside if it loses this level decisively, and by that I would mean something like a strong red candle that closes down here below. That would not look very good for the software sector as it continues to struggle. The Mag 7 as a group bounced back up, but once again, declining 4-week moving average. We've got this line, price reference point here, that has been a factor in the past, and now looks like it's adding some resistance or some supply here. And then we've got an anchored VWAP, a sharply declining 10-week moving average, and several other factors to deal with if the Mag 7 names were to continue to rise in the next week or two. Looking at them individually just very quickly, here's Apple stuck between the 10 and 40 week. Amazon, bearish consolidation pattern, but trying to find some support here around the $200 level. Google, probing, getting close to the rising 40 week here, and it's a strong candle, but it's still inside last week's large range with several factors pushing down overhead. Meta, same kind of deal, and we've got what was support now looks like resistance, and Meta still got work to do. Microsoft just really struggling, and a big leader downward in the overall software sector there. Look at how the extension and the distance between the 4 week, the 10 week, and the 40 week up here. Just really bad situation here for Microsoft. There is some price history back in this area, so a lot of people are looking for a bounce, and they may prove to be right, but so far the trend has not changed. It's still in a downtrend, a very pronounced downtrend, and the higher likelihood event from here is more consolidation at best, or decline further in Microsoft there. Nvidia still in a choppy, tight range. It did bounce, it's a little bit of a bounce, but it touched this anchor from last April's lows, and lots of factors overhead here with the declining 10 week, the still slightly rising but flattening 40 week, and an anchor from this breakout candle above on Nvidia with RSI right here at the 50% level. And then finally Tesla. This is an even clearer picture of a steady, controlled descent, as participants and investors in Tesla seem to be lightening up all the way down through here. So no resolution there in any of the indices, save XBI and any of the sectors that we've looked at just now, or even the Mag 7 names individually. Now let's take a look at some breadth and participation measures. And if you've been following along, this is one that I include every week. The percentage of 100 stocks above a 50 and 200-day moving average. A little bit of improvement here, even though we didn't get down to this, what I call a washed out level that we'd kind of been looking for. It did get a little bit of a bounce here, 28.6% there on the number of stocks, percentage of stocks above a 50-day, and the percentage above a 200-day moving average just about flat here in the middle after a slight rise this week. So no major development, just another factor to note, another piece of the puzzle. And now we take a look at the bullish percent indices. First for the S&P 500, got down and pierced this bullish support, got a very slight rise and reversal here. Maybe some resistance in this level, certainly no resolution yet. This is still in a bear correction status. Looking at the NASDAQ 100 measure, just a kind of a steady drip lower there, much like the price. We've got a 3-box reversal here, but certainly no change in trend as it continues below this very short series of bullish support lines there. And finally the NYSE, continued decline. Not even a little bit of a bounce is indicated by the actual measure here, but not enough to reverse into a column of X's. So what that tells us, once again, is, and take a look at the show notes if you want to see my chart school articles about these relative strength and measures and bullish percent indices, what they are, how they work, and what they are telling us. That's all in the show notes there down below. But this is just very simply giving us the percentage of NYSE stocks on a point and figure buy signal. And so right now that is low and getting lower, with the exception of this slight bounce there on each of these. So participation is still light, even though volume is in line, and we've got a little bit of a bounce there this week. We've still got a long way to go before we see any lasting or real meaningful reversal. So that's your look at the weekly charts there, the ones we check every week. And we've got a counter trend bounce here. This is not a confirmed reversal yet. But we don't have to trust it, and we want to see this sequence build, not try to anticipate. So the burden of proof remains with the buyers, and we have no urgency on the long side there. We need to follow the process, follow the sequence, and see what develops next. And the potential sequence that I've mentioned several times that we want to be looking for as we move over to the what I call the roadmap. This is a 1 hour time frame on the 4 major stock index futures. We've got the S&P 500 here, the NASDAQ 100 up here, the Russell 2000, and the Dow in the bottom right. And we want to see a sequence develop of higher highs and higher lows above a rising 5-day moving average. Higher highs and higher lows above a rising 5-day moving average. And we're getting closer. This high was better than this one. And whether you call this a low or not, maybe that's just a consolidation period. This has potential to be the first meaningful higher low, as it came down here on both of these indices and tested the 5-day pretty much perfectly there. So we don't have a higher high yet. So that'll be the next leg. And if that happens early next week, then we can start to get a little more involved or active, or while continuing to be selective on longer positions that tend to be in line with the overall market there. So this is the beginning stages of a possible sequence of reversal, but once again, no resolution yet. So we'll do what we always do. We continue to watch and monitor the price action, see how it develops. We can be mindful of the events coming. We know a large number of changes and developments and headlines out of the Middle East and our involvement there as the United States. And we've also got the normal calendar items to be aware of next week. On Wednesday, we've got some FOMC minutes. We've got earnings from a couple of companies like Delta Airlines and maybe a few others, but no huge notable names there. And then we've got PCE and jobless claims and CPI all on next Thursday and Friday. So those could move things a little bit. So just be aware that they're out there. I don't know that it's a trading event, but it's something that you don't want to be surprised by or caught off guard with. So that's it for today's Good Friday look at the weekly charts. I hope you find them helpful. As most of you, these are available every week on tradingadventures.com, on X, and other places. You know where to find them. And if you're newer here, you can get these every week right on my website. So we'll continue to track them, see how markets develop, see what we think about positioning and how involved or perhaps uninvolved we want to be in the days coming ahead. So thanks for watching. We'll see you next time.